Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. Today I'm going to review the overall market this past week, which includes the US and international markets, different sectors, market movers, and earnings. The market wasn't doing well this past week. Let's take a look at the volatility index. So that's the VIX. So the volatility index, essentially the fear index, as it increases, then there's more market movement. And as you can see, July to early October, it was pretty calm, but recently it spiked up, and that's why there's been a lot of market movement. All right. Overall, it's been pretty calm the past few months, but it spiked up and it caused a mini dip this past week. Let's take a look at the major indices. So start with S&P 500, SPY. So this tracks the S&P 500, and past week was down 3.46%. And at one point it was down about 5.2%. Next is Dow Jones Industrial Average. This was down 3.6%, and at one point was down 5%. Next are the Qs, which track the NASDAQ 100. It's down this past week 2.47%, and it was at one point was down 5.7%. Let's take a look at the international market. So the developed markets, I'm going to use the Vanguard Developed Market ETF. Past week, down 2.77%, and at one point was down 3.7%. So not as bad as the domestic market or US market, but it was still down this past week. Next is emerging markets. I'm going to use the Vanguard Emerging Market ETF. This was actually up 0.03%, and at one point was down 3.8%. So the takeaway is don't panic sell. Continue to hold and buy during these mini dips, and dollar cost average to your portfolio, because volatility is opportunity. So essentially when there's these mini dips, it's opportunities to buy. So let's look at the sectors. So past week performance, the utilities, conglomerates, and consumer goods performed the best this past week, while industrials, financials, and technology performed the worst. So typically, utilities and the consumer staples are less volatile, but also have less upside, versus technology, financials, and industrials are more cyclical and volatile and have more opportunities for growth. So that's why you see here, tech, financials, and industrials dip the hardest, especially industrials. Next, let's look at market movers. So let's start with the losers. Square, past week was down 19.71%, which isn't bad considering how much it's been going up this past year, 123.36%. Yeah, I was definitely due for a pullback, especially with it went up so much. So this is one of the more volatile stocks, higher highs and lower lows. Next is American Airlines. Past week, down 15.2%. Overall, it's been trending down this past year. Next is Ferrari. Past week, down 9.71%. Past year, up 1.14%. Past 5 years, up 153.3%. Next is Qualcomm. Past week, down 9.11%. Past year, up 25.04%. Next is Applied Materials. This is down 8.65% this past week. Past year, trending down 36.17%. Past 5 years, at one point it was up 280%, but now it's down quite a bit. Next is Autodesk. Past week, down 8.57%. Past year, up 15.37%. Last but not least, for the losers, NVIDIA. Past week, down 6.89%. Past year, still up 28.29%. So let's look at the gainers now for the past week. Start with C-Trip. Past week, up 11.58%. Past year, still down. This is one of the Chinese stock. It's like the Expedia of China. Next is Costco. Past week, up 3.48%. This is more of a consumer staple, so it doesn't dip as hard and it's less volatile. Next is JD. Up 5.84%. The past year, it's been trending downwards. Another Chinese stock. So if you look at the 5 year for JD, it's very close to when it's its IPO at $21. Next is Keurig Dr. Pepper. Past week, up 3.04%. Whoa, not sure what's up with the one-year chart. Past 5 years, up 272.26%. Last but not least is NetEase. Past week, up 6.05%. It's another Chinese stock. It's been trending downwards. At one point, it was up over 400%, but it's been trending downwards since. All right, now let's look at the past week earnings. So the banks, JP Morgan, Wells Fargo, and Citigroup all reported earnings this past week. Let's start with JP Morgan. Actual EPS was $2.34 versus expected to $2.25, so it beat earnings. Next is Wells Fargo. Actual earnings per share was $1.16 versus $1.17. And for Citigroup, actual EPS was $1.73 versus expected $1.69. Let's look at Walgreens. Actual EPS was $1.48 versus $1.45 expected EPS. And last but not least, Delta Airlines. Actual EPS is $1.80 versus expected $1.74. So it seems like this past week, most of the earnings reports beat expected. Or, yeah, was the earnings beat, so it beat expectations. So look at next week earnings. So I'm going to be following Johnson & Johnson, Bank of America, United Health, Taiwan Semiconductor Manufacturing Company, Procter & Gamble, Netflix, SAP, IBM, Philip Morris, Abbott Labs, Honeywell, PayPal Holdings, American Express, and Goldman Sachs and Morgan Stanley. So I'll be following those earnings reports next week. That's all for this video. How was your portfolio doing this past week? Comment down below. If you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. See you in the next video.